All right, we are here. Audio only, but we're here. Good afternoon, all you magnificent melonheads, and happy Friday, everybody. I hope you are well. It's Friday the 13th, 2024, and you may notice we are audio only today. Whatever issues struck my camera this morning during the live stream persist right now. Everything looked fine on my end. My camera is working fine. My OBS is working fine. But for whatever reason, when I try to route that through StreamYard, it is not working. And I get all choppy. So we're going to have to do this one audio only today. And I thank you guys for your patience with our technical difficulties. But what we got to talk about today is these persistent cries for 50 basis points. Everybody has already forgotten about inflation, especially this lady up here on the screen, the one who told us it wouldn't happen to begin with. That is world famous, and I have my air quotes up in the air, world famous economist turned political hack Claudia Sahm was on the airwaves today demanding 50 basis points. The word she used, she said the Fed needs to get out of the way and raise by 50 basis points, while also reassuring everybody that we're not in a recession and it's the best economy ever. That's kind of strange that she would do that in the same thing. Well, when you factor in that she's a political operative now and that she works for the Biden campaign, I'm assuming now she works for the Harris campaign, well, then that makes sense. Give me a 50 basis point rate hike so that the stock market gets juiced and heads higher heading into the election, and we don't have higher unemployment. And, then I'm going to guarantee, I'll reassure everybody that everything is fine in the economy at the same time. And, of course, she has been gaslighting the hell out of the American public for years. I pointed that out on X a few months ago, and I got blocked very sadly on Twitter by Claudia Sahm, who is an intellectual coward who blocks everybody. By the way, if you go on X and you look up Claudia Sahm and blocked, you're going to find freaking everybody has been blocked by this lady. It's almost like her ideas are so bad and so awful that she can't defend them. And so she just trigger happy blocks everybody. Isn't that funny? Isn't that interesting? But more interestingly, there was an op-ed I found that she put out in 2020, October 16th of 2020, where she talks about how all the money men, i.e. monetary policymakers, were stuck in the 1970s while lamenting that, well, the gender of them, basically, they're all men. She's gender baiting, race baiting. She's saying, we needed easy money in 2020. We needed more easy money to fight things like climate change and to help wealth inequality. Because, nothing helps wealth inequality like easy money, right? Talk to somebody who makes less than $40,000 a year. How has their wealth equality done in the last 4 or 5 years while the stock market has gone vertical and they can't afford to eat? Yeah, easy money will do wonders for wealth equality, Claudia. But she's out on the airwaves today demanding 50 basis points. It was laughable. And we're going to go back and look at some of her prior ramblings and prior writings and say, maybe we should put her in charge. That ought to speed us on our way to success. But before we do any of that, we have got to go through markets because markets were ripping higher earlier today. Let's see how they do in the last few minutes of trading for today. And this is the point where I remind you guys to please hit that like button and the subscribe button if you're new here, because normally my ugly mug is on the screen and my giant melon of a head is there with a big glare coming off my forehead. But I'm having tech issues today, so we are audio only. So feel free to hit that subscribe button and we can talk face to face next time. Right now, the S&P 500 is up 27 points, about 0.5% higher today. It's been higher pretty much all day, just off the highs of the day. Now, looking at this week, these are now daily candles. We're going back to about the middle of June here. And you can see this week, it is straight up 5 green candles in a row. Nothing but up this week, guys. On what exactly? I don't know. What was the great economic news that we got this week? We got a lower than an expected inflation print. It was a little bit lower than expected, but, the core inflation was actually higher than expected. And then PPI confirmed that. So the inflation print, I guess it was okay. It wasn't great. Certainly wasn't this kind of great. Look at all this green here. And then, of course, we were still coming off of the big jobs disappointment from last Friday, that big red candle. Market forgot all about that by the first thing Monday morning. Stocks just straight up all week, recapturing the 50-day moving average on Wednesday. And now we're actually threatening to take out the all-time highs here. Look at this. All-time high. We stopped just short of that a few weeks ago. and now we are within striking distance of another all-time high in the S&P 500. Number go up. It's the best economy ever. Meanwhile, the Dow is up another 275 points, about 2/3 of 1% today. Let's look at the long-term chart of the Dow, and it's more of the same. We did have one little red candle there today or this week on Tuesday, but other than that, it was straight up for the Dow. Again, forgetting all about that lousy jobs report on Friday. And of course, the Dow is once again within striking distance of its all-time high, although well off the highs of the day at the moment. 41,382 for the Dow. Number go up. NASDAQ up 100 points, 0.57% higher, also higher pretty much all day. Long-term chart of the NASDAQ. Now, this one is interesting. Doesn't look so good. Obviously, we were nothing but green all week, right? 5 green candles in a row, forgetting all about the jobs report on Friday. Recaptured the 50-day moving average yesterday on the NASDAQ. But notice the consistently lower highs here, assuming we're at a high. I mean, nothing goes up in a straight line forever, even this market. So assuming we get a little bit of a turn next week because we've had 5 green candles in a row, looking at consistently lower highs here in the NASDAQ, that could mean some of the enthusiasm for tech is wearing off here. Of course, we've seen a lot of that in recent weeks. The dollar, meanwhile, is weaker, although looking a little better than it did this morning, currently down 24 basis points. At one point today, it was way down, but we're at 101.12. That's down about 1/4%. And watch out for that Japanese yen, guys. The yen is down again today, 140.93. That is down about 0.6% off the lows of the day. But we are still seeing that weakening in the Japanese currency. These are daily candles going back to about mid-July. And again, we are well below that low from August 5th when the market went into all-out panic. So we are now lower than that. The yen carry trade is still a risk that's out there, although the market has forgotten all about that, just like Claudia Sahm has forgotten all about the inflation that she was totally wrong about. Moving on, let's look at the bond market here. We have got the U.S. bond market down across the board. 30-year Treasury down 1.5 points. The 10-year down 2.5 points. 2-year down 7 points. Big drop in the 2-year today. And the 1 month at 5.02. That's the lowest I've seen the 1 month in a long time there. Down 5 basis points today. Heading at least to 5%, maybe lower, because again, the odds of that 50 basis point rate cut are increasing here after Nick Timiraos's article yesterday that we talked about on the morning live this morning. I won't rehash all of that, but Nick Timiraos is the Fed's preferred mouthpiece. When they want to leak something to the press, he is usually the conduit. And he came out yesterday with an article suggesting the Fed may move more aggressively in September. And instantly, the odds of that 50 basis point rate cut almost doubled on the publishing of that article. And looking at commodities, it's been a pretty good day for gold and silver, although we are well off the highs. Gold and silver were looking great this morning. They're still looking pretty good, but nowhere near as good as they did at the open. Right now, spot gold, $25.81. That's an all-time high, up $23 or 0.9% higher. Spot silver is at $30.59. We were briefly above or almost above 31 at one point today. We were as high as $30.92 for spot silver. December silver futures were above that level. We were at 31.27 at one point today, but sold off pretty hard after that. Still up, though, 72 cents on the day, 2.4% higher. Copper, platinum, palladium, all up today. The metals are up pretty much across the board, and WTI crude is clinging to those gains from earlier this morning. It was up over $1 at one point this morning, now just 6 cents higher. So commodities mostly green today. Wanted to show you guys the silver chart again. We went as high as almost $31 today on silver, but a good couple of days here for silver, recapturing that 50-day moving average yesterday on that monster move that gold and silver made. I think that was largely driven by Nick Timiraos' article, and silver was up every single day this week. 5 green candles in a row. I like the shiny. Bitcoin, meanwhile, finally caught a bid this morning. We were sitting here wondering what's going on with Bitcoin. It was down even though everything was up, even though the odds of the rate cut were increasing, the bigger rate cut. Gold and silver were flying, but Bitcoin was sitting idle, strangely. Well, it must have heard that message because Bitcoin is now up $1,800, trading just below $60,000. Now, this is interesting. It's got some serious resistance here, not only the psychological resistance of that $60,000 level, but also the 50-day moving average just happens to be exactly there. So Bitcoin struggling at 60,000 here. Something tells me it may take a break for a little while. It's a pretty strong resistance it has run into, although it's at the high of the day at the moment. It's been here a few times today, and it has not been able to break above it. All right, let's talk about the main issue at hand, though, shall we? This is the one I'm talking about. This is an article in Business Insider today by a guy named Matthew Fox, but it is all about Claudia Sahm, my favorite political hack. The feds need to start getting out of the way and deliver a big rate cut next week, famed economist Claudia Sahm says. Yes, all those men with their genders at the Fed, and trust me, guys, I'm not projecting. This is the kind of crap that she spews. All those silly men just need to get out of the way and turn on the easy money so we can fight climate change again. The Federal Reserve absolutely needs to deliver a 50 basis point interest rate cut next week, according to famed economist Claudia Sahm. I use that famed economist term very loosely. She plagiarized somebody else's rule and then named it after herself. Sahm told CNBC on Friday that the inflation data alone is enough to cement a jumbo rate cut from the Fed, not to mention recent signs of a slowing labor market. Now, this is interesting because the labor market, if you talk to Claudia Sahm, the labor market is strong as all get out. And we've got all these millions of jobs and it's the best economy ever, unless we're talking about the return of easy money. And then she's all like, oh, the slowing labor market, you better cut 50 points. Well, Claudia, you're going to have to pick one, hon. I'm sorry. You can't have it both ways. You can't, on one hand, say the economy is strong as hell, and all you doomers out there need to shut up and be thankful for how good you have it. And then on the other hand, talk about how the slowing labor market means we need to cut 50 basis points right away before things get worse. Well, you're going to have to pick one. You got 2 more months of good inflation data. I agree with that. The inflation data was better. I wouldn't call it good. It's still above the Fed's arbitrary 2% target, but it's certainly better than it's been for the last 2 years, the last 2 years of inflation that Claudia Sahm told us would never happen, but it is improving. That's what the Fed asked for. That on its own would have gotten us 25 next week, as it should, and will get us a whole string of cuts after that. I mean, she is just pigging out here. Please, sir, may I have some more? Cut my rates, zerp my burr, give me back my easy money, so that I can juice the economy and hopefully get a lucrative job posting in a Harris administration. And then I can basically sell my favor for speaking fees after I leave the job. But with the Fed funds rate being above 5% for longer than a year, the weak July jobs report, and sharp downward revisions to recent job growth, the Fed needs to make a big adjustment, according to Sahm. Now, that is amazing that Sahm is talking about the big downward revisions, because Claudia Sahm has been telling us how good the economy is because of all the jobs that were created. And now she's just kind of casually disregarding that and now referring to the big downward revisions that people like me and all the people she's blocked have been talking about for months. Well, geez, Claudia, a big change of heart here. There's an aspect of just recalibrating. We got some more information. We need to kind of clean it up, do a 50 basis point cut, and then be ready to do more. Oink. She is pigging out. She wants 50 points, and then she wants 50 more after that. She wants the return of Zerpenber, especially if Powell wants to deliver on his we want no further weakening, no further cooling. They're going to have to really move here, because that cooling trend is well established, and until it is interrupted, we're going to continue to see payrolls drift down and unemployment rate drift up. Again, this is odd to hear her talking about like this, because she's been gaslighting the whole country for months now, blocking anybody who speaks up about it, talking about how the job market is so strong. And now she's talking about well-established trends that, hey, you and I, we've all seen this. I mean, we've been talking about it for months here, but she's been pretending it's not happening. So, look, Claudia Sahm is sitting here. She's basically begging the Fed, give me my 50-point cut. So let's just real quick revisit Claudia Sam's track record, shall we? Because, Claudia Sahm, who says it's the best economy ever, and then says, well, the economy is getting weak really fast, so we need 50 basis point cut. Let's forget that little inconsistency here. Now let's talk about this one in the New York Times. All right. The money men could save us, but they're stuck in the 70s. This is dated October 16th, 2020. Team transitory. As a matter of fact, Claudia Sahm was one of the pioneers of team transitory. And then she goes on to say, and unfortunately, yes, most of them are men. Yes, if only we had women in charge in 2020, we wouldn't have had inflation. Is that what you say? I don't know. But you know what? Why miss an opportunity to pander to gender biases, and why miss an opportunity to drive a wedge between people and make them hate each other and make them argue over silly things like race, gender, and all that? Let's just lament the gender of monetary policymakers. I can tell you, I have a lot of bones to pick with the guys at the Federal Reserve and the people at the Treasury. Their gender ain't among them. All right. But that's apparently important enough for Claudia Sahm to mention in the byline. Now, this is in the New York Times and it's paywalled. And I'm sorry, guys, I'm just not going to pay for the New York Times. I mean, I will sooner go hunting with Dick Cheney before I pay for the New York Times. I would sooner buy crypto from Martin Shkreli before I'll pay for the New York Times. I would sooner let Amber Heard decorate my hardwood floors before I paid for the New York Times. But you know what? Luckily, we've got this wonderful new tool called ChatGPT. And you know what ChatGPT likes to do? ChatGPT likes to plagiarize paywalled content, including the New York Times. Well, that's fun. They're actually getting sued for it right now, and they're fighting that out in court. And since I am a gigantic critic of artificial intelligence and also kind of a hypocrite, I went to ChatGPT and I put the title of the op-ed in, and I asked ChatGPT to summarize the op-ed for me. Now, assuming this is not an AI hallucination that can't count the R's in strawberry or glue pizza together, one of those things, this is what ChatGPT spit out when summarizing Claudia Sahm's op-ed about the money men and their genders. The op-ed, "The Money Men Could Save Us, but They're Stuck in the 70s, argues that many of today's most influential economic policymakers and investors are still anchored in outdated views from the 1970s. Outdated views from the 1970s. Now, guys, remember the date of this. This is so important because this lady, she wants to be in charge of economic decisions in the United States. She is part of the Harris campaign or the Biden campaign. I don't know if she moved over to Harris or not. But this is who will be in the economic think tank, the economic brain, the engine of our economy, should Kamala prevail. She's talking about how policymakers were stuck in the 1970s. She's using that almost scoffingly. This is in October of 2020, right before inflation started going gangbusters. The author contends that these money men, predominantly male, hold on to obsolete economic theories shaped by the high inflation and financial crises of that era, making them resistant to modern solutions for current problems like inequality and climate change. Yeah, we needed to print more money to fight climate change. We needed to print more money to fight inequality. That's what we should have done in the 2020s. The $6 trillion the Fed just injected into the economy, causing prices to skyrocket ridiculous amounts. Oh, that wasn't enough. Remember, she was saying we needed to do more. The piece criticizes these decision makers for their reluctance to adapt to new economic models that prioritize sustainability and inclusive growth. Instead, they continue to favor policies that prioritize financial markets and inflation control, reminiscent of the 70s economic thinking dominated by figures like Milton Friedman. And by the way, Milton Friedman, if he were around today, he would be laughing out loud at this one. They're talking about reminiscent of 70s economic thinking that was dominated by inflation control. Oh, those old-fashioned economists and their worries about inflation. If only we had somebody with the foresight of Claudia Sahm, who was in charge in 2020, she could have printed even more money and made things so much better for all of us. The op-ed suggests that this outdated mindset is hindering progress on key issues like climate change, technological innovation, and addressing wealth inequality. By the way, the inflation that we've had over the last few years, how's that wealth inequality going? Do you really think that the bottom has been aided by this inflation, by asset prices rising and consumer prices rising and their wages being stagnant? Do you really think wealth inequality is helped by easy monetary policy? Are we still pretending that? That is laughable. The article highlights the need for fresh perspectives, more diversity in leadership, and a shift in focus toward long-term, forward-thinking policies to navigate today's challenges. In other words, on October 16th of 2020, in this op-ed in the New York Times, besides her ridiculous gender pandering, Claudia Sahm was saying we needed even easier monetary policy, unhindered by the outdated thinking of the 70s that placed a bigger priority on preventing inflation. That's what she said in October of 2020. Now she's saying, oh, we need bigger rate cuts. Well, yeah, man, let's put her in charge. If we're going to quote Corporal Hudson from the Aliens, yeah, man, let's put her in charge. It's a bug hunt, man. Oh, but it gets better. Claudia Sahm's record, it gets even better. Now, this is one of the ones, I'm pretty sure this is what got me blocked by her when I had issues with this one. But this is her Substack, which I am definitely not subscribed to. But she says most Americans are better off financially now than before the pandemic. And guys, please don't punch your monitors. Please don't throw anything at the screen. I'm just repeating what is being said here. These are not my words. This is Claudia. She's saying in November of last year, and I'm sure if you ask her today, she'll repeat the same BS. Most Americans are better off financially now than before the pandemic. Jobs, paychecks, spending, wealth, and financial security have made big gains, she says, which offset the burden of higher inflation. That's true for most families. The good news stretches far beyond the rich. And, talk about somebody who needs to get out. Claudia, the sun is free. Get outside, touch grass, get some vitamin D going, because you need to get the hell out of Wall Street and actually talk to some people. This is unreal. This is the gaslighting that really hit a fever pitch in the early spring of this year. And I think it peaked with Greg Ip's article in the Wall Street Journal that tried to parrot these same claims. But this is some seriously gaslighting garbage. She's saying the majority of Americans are better off financially now than they were before the pandemic. Full stop. And by the way, I people who pronounce and enunciate punctuation are just the worst. They're conversational handicaps, if you ask me. Full stop. People who say period after a comment. Yeah, okay. Good luck with that. People are better off than they were before the pandemic. She says not every American, but the majority. That's true across demographic and income groups. It's in the aggregate and individual level data. She's talking about millions more good jobs. All right. That's BS, because the million jobs or the millions more jobs just got downwardly revised away. They never happened. Millions of downward revisions, I might say, Claudia. And they sure as hell aren't good jobs. We have lost millions of good full-time jobs. I talk about this every jobs report. I open up table A9 of the BLS payrolls report, and you can see it there in print. We have been shedding full-time jobs for years, and we've been replacing them with bullshit part-time jobs that don't pay squat. And she's sitting here telling you you're better off because of those 2 part-time jobs you got to replace your former full-time job that you lost. She's also saying bigger paychecks even after inflation. 100% baloney, false talking point. All right. Wages have majorly lagged inflation since before the pandemic. And it's not even close. Even if you use the BLS numbers, the CPI, which grotesquely understated inflation for the last 4 years, even if you use that number, wages have nowhere near kept pace with inflation. She's just full of it. Consumer spending back on strong pre-COVID trend. Yeah, thanks in part. I should have had this chart up already. But yeah, consumer spending, it looks great. Never mind the fact that we've now got $1.068 trillion of credit card. Does this look like Americans better off pre-pandemic? Here's pre-pandemic, guys. Here's the credit card bill pre-pandemic. And here's where we are now. Let's zoom in a little bit. Oh, yeah. Look how much better off we are. Unfortunately, this isn't a chart of better off. This is a chart of how much money we owe on high-interest credit card debt. No, Claudia, we're not better off, and it's not even close. And this doesn't even begin to cover the tens of billions of buy now, pay later debt that's also out there. Americans are better off? Really? Okay. All right, this is great. Let's put her in charge, man. Historic increases in wealth, including at the bottom. Assuming Claudia Sahm ever talks to anyone at the bottom, I wonder what they would say if she actually spoke to somebody. Roll up, Claudia. Roll up to one of those tent cities. Roll up to one of those homeless encampments that is in every city around the country, and it's overflowing now. And just jump out of your car and just scream like, how are you guys enjoying your increases in wealth since the pandemic? And see what happens. Might want to wear some Kevlar if you're going to do that. But why don't you try that, Claudia? Why don't you see how the bottom is doing? I mean, the people in the tent cities, I'm sure, would love to share their thoughts with you since you're so interested in what's going on at the bottom. And of course, she's saying the lowest debt burdens on record. Who says this shit? Lowest debt burdens on record. All right, yeah, that. Does this look like the lowest debt burden on record to any of you guys? Somebody peer check me on this one. Somebody give me a little sound check. Is this a lower debt burden on the lowest debt burden on record? I mean, I don't have a formal financial background. I could be wrong about this, but this sure looks like debt burdens are higher. And this is just credit card debt. Mortgage debt, higher than ever. Federal government debt, are you kidding me? State and local debt, higher. Car debts, higher. Student loan debts, higher. Matter of fact, everything is higher, and a lot of people aren't paying for it. And of course, Claudia goes on. She ends it in closing. You got to love it. You got to love it. We're going to scroll way through all of her attempts to justify this using cherry-picked data. She says, in closing, some gloom is understandable today. We lived through the unimaginable with the pandemic. We must also live in the real world where most Americans are financially better off regarding their jobs, wages, spending, wealth, and debt. And all of that after we account for inflation, we are in a better place. It's a huge accomplishment. We should celebrate it and build on it. And all I can say is, Claudia, I have had enough of your success. Please do not build on my success. I do not want any more success. I think 90% of Americans, if you actually talk to them, will ask you, please don't build any more success. We're all successed out here. We're all good. Success off. All right. Yeah, I'm pretty sure that's what people would say if you actually deigned to speak to any of these people rather than just block them when they tell you they're full of shit because you and your easy money policies have put them in the poorhouse over the last few years. Guys, you may have noticed that I'm not the president of the Claudia Sahm fan club. And Claudia, I'd love to chat more, but you blocked me, so she can't see this. I'm sure somebody will probably send it to her. But remember, guys, she's a partisan operative now. She has traded in her credibility, which I can't believe she ever had any credibility to begin with. Maybe she's done some good work in the past, but I don't know. People who write op-eds in the New York Times talking about the need for more money printing after $6 trillion of it while lamenting the gender of policymakers does not strike me as a credible individual. And people who just rapid fire, itchy trigger finger block anybody who questions their theories certainly are not academics who are willing to put their work through the rigors of peer review and critique. Nope, she is an echo chamber occupying political hack and nothing more. And for some reason, people still quote her. And anytime you see somebody quote her or talk about the Sahm rule, just remind her about how they were stuck in the 70s, those men, if they had only printed more money to fight climate change. And remind her that she said Americans are all better off, full stop, pronouncing her punctuation. Not such a big fan of the Sahm. And, let's talk about it a little more. I think I'm All right, how about now? You guys got my audio now? Good God. Oh, all right. It's been one of those days, folks. Yeah, sorry. Somebody must have built on my success. Someone didn't like what I was saying about Claudia. I don't know. But having issues with the StreamYard today. Now we've got sound. Thank you guys for sticking with me. Yep, tech issues are fun, especially in this space. Let's talk about OpenAI because this one came out this morning. Now, there were rumors last week that OpenAI was seeking a $100 billion valuation. And, people like me were saying, go home, OpenAI, you're drunk. And, well, it turns out they weren't seeking a $100 billion valuation after all. So that's good. We don't have to worry about the $100 billion valuation. But now they're seeking a $150 billion valuation. And this is interesting because this company will be bankrupt if they don't get this cash infusion. There was articles going around a few weeks ago that said OpenAI is going to run out of cash because they're not profitable. Nobody in AI is profitable. Not a single artificial intelligence platform is profitable. The people who are selling the GPUs are making money. The data centers are making money, but none of the AI apps are even close to profitable. OpenAI is probably closer than anybody, and they're burning through cash like a drunken sailor. But let's talk a little bit about this one. And thank you guys for the sound check. I really appreciate that. AI heavyweight OpenAI is in talks to raise funds at a valuation of $150 billion, Bloomberg News reported on Wednesday, a move that would fortify its status as one of the biggest startups in the world. The maker of viral chatbot ChatGPT is raising $6.5 billion from investors, the report said, citing people familiar with the matter, and another $5 billion in debt from banks in the form of a revolving credit facility. So about $11.5 billion that might buy them another year of life at the rate they are burning cash over at OpenAI. OpenAI's new valuation would be 74% higher than the $86 billion it fetched in a tender offer earlier this year. So what has happened to OpenAI? Has their product, let me know. We just used OpenAI's product to plagiarize the New York Times. So, yeah, that's cool. It's useful. It's neat. But what has OpenAI done in the last year that warrants increasing their valuation by 74%? I don't know, especially considering that they're currently being sued by the New York Times. I can't imagine why they're being sued by the New York Times. It's not like I just used them to bypass a paywall about Claudia Sahm's op-ed on freaking live internet. I don't know why OpenAI would be suing, or why New York Times would be suing OpenAI. But guys, this is nutsy, man. $150 billion for a company that's not profitable and not even close to profitable. And as far as we can tell, they're actually getting further away from profitability. It's not a public company, so we don't know what their financials really look like. But we can tell based on the frequency that they're raising capital that their cash burn is accelerating and not slowing. So I don't know. But I do want to give a shout out to, there it is. To Mr. John Rich, in parentheses, wealthy, who's coked up options on X. Thank you, Mr. Rich, for this one today. He talked about OpenAI is raising at a $150 billion valuation. And then he says, here's the advanced research tool that they use to determine their value. And I don't know, I guess you might say this is my quant, is probably the quote that they would say. That this is their quantitative analysis in progress over at OpenAI to determine their valuation. So thank you very much to Mr. John W. Rich for the laugh this morning. This is just another in a long series of very outlandish claims being made by AI companies. And there was another one that happened this week, and I've been trying like hell to find anything resembling some facts about this story. We got this one, give it a second because I had to reboot everything. We got this one in Data Center Dynamics this week. All right. And I have seen this article repeated all over the internet. There are dozens and dozens of media outlets reporting this story, hundreds of people talking about it on Twitter. All these people are saying, man, Oracle is next level. These guys operate at warp speed and all this stuff. Oracle stock is surging based on these comments from the CEO. As with anything AI, nobody is asking any questions. So first, let me share with you the story, and then I'll ask a question. Oracle to build nuclear SMR-powered gigawatt data center. All right, gigawatt. All right, that's 1,000 megawatts, 1.21 gigawatts. You got to say that. All right, everybody, people in nuclear say it all the time. Quarterly revenues reached $13.3 billion, up 7% year over year. We ran over Oracle's earnings. They were fantastic this week. All right, and Oracle stock surged. They were surging again this morning, but they gave up all of their gains. I mean, look, Oracle stock was up like 9% pre-market, and it just came straight down, and it's been falling all day. So maybe people are starting to like actually wonder, hey, maybe the comments that this guy Ellison is making, maybe he's full of shit and he's just spouting stuff off that he can't prove. And as long as you idiots keep bidding up the stock, when he does it, he's going to spout off increasingly ridiculous things until you stop paying up for his stock. Well, here's what he said. All right. He said, Oracle planning to build a gigawatt scale data center powered by 3 small nuclear reactors, or SMRs, that stands for small modular reactors, according to founder Larry Ellison. Chief Technology Officer and Chairman Ellison told investors during an earnings call this week that Oracle currently has 162 cloud data centers in operation or under construction globally, and the largest of which has a capacity of 800 megawatts and is set to house NVIDIA GPU clusters. But the company will soon begin construction of data centers that surpass a gigawatt of capacity. Now, guys, 1 megawatt is enough to power 800 homes in the average U.S. city. All right. So he's talking about 800,000 homes worth of power will be consumed by this data center he wants to build. That's the size of a medium city. And, well, where's that power going to come from? Magic small modular reactor power is what he says. Here's what kind of really got me. He says one of those projects, Ellison said, has a location already selected and is in the middle of the design process, and the data center is set to be nuclear powered, with Oracle already having building permits for 3 small modular nuclear reactors, or SMRs. Further details of the project were not shared. Data Center Dynamics has reached out for more information. Now, let me just say, Data Center Dynamics, thank you for reaching out for more information. At least somebody is doing that. Now, they haven't gotten any of it, but at least they're asking. Because, guys, this does not pass the sniff test. I have to say, it just doesn't. The data center is set to be nuclear powered, with Oracle already having building permits for 3 small modular nuclear reactors. All right. Now, I'm going to operate with the assumption here that he's talking about within the United States. That's a big assumption. Oracle's a big company. Maybe this is not in the United States. And I'm going to tell you, the only way this statement could possibly be true would be if this gigawatt data center was not going to be built in the United States. And of course, that brings all kinds of problems. Like if you're going to buy NVIDIA GPUs, you're going to have to make sure that they're going to a country that the U.S. approves from because of export controls and the risk of the things going to China. But guys, here is the NRC's website, the Nuclear Regulatory Commission, nrc.gov/reactors/new reactors/SMR/licensing activities, pre-application activities. Now, this is all of the small modular reactors that are in progress of being licensed in the United States. All right, now here's the project name, the application type, the applicant, and the status. Now, there was only one actual application approved by the NRC that I'm aware of, and I've tried to find this, and that was for this one in Utah that NuScale was going to be built. That was this one, not this one. Where is it? This one, this carbon-free power project that NuScale was building. That was a test reactor, but it was going to actually generate electricity. But you may see here, guys, that that application has been withdrawn because NuScale abandoned the project earlier this year because the costs were spiraling out of control. Now, look, I'm a big fan of nuclear power. I worked in nuclear power for 15 years. I believe in the technology. I think we should be building more nuclear reactors. But the fact is, we're not. In the United States, there was only one electricity generating small modular reactor that was approved by the NRC, and they canceled it. And so what is Larry Ellison talking about here? He's saying the data center is going to be nuclear powered, with Oracle already having building permits for 3 small modular reactors. All right, that's his words. And this was repeated all over the press this week and all different media outlets. I don't see Oracle anywhere here. Now, the closest thing I can imagine to this might be this Clinch River site that the Tennessee Valley Authority is building, because Oracle has announced plans to move their headquarters to Tennessee, and there is an application for a test reactor to be built in Tennessee, but that is not an electricity generating reactor. It's only a 34 megawatt thermal test nuclear reactor that they're building there. It's not going to even generate any power. It's just to prove the technology concept. So it's nowhere near a gigawatt of electricity needed to power this massive data center. And look, all of these other applications, these are all pre-application activities. Every other line item here is in pre-application status, and it all says either in progress or withdrawn. So in the United States, there is not one single approved construction permit for a small modular reactor that can generate electricity. So unless Larry Ellison is talking about a gigawatt data center in some other country, which is, it's possible, but it's also, that's a whole different set of challenges. Unless that's happening, he's full of it. And they're just repeating this in the press over and over again. I mean, he's saying, yeah, we're moving at warp speed. We're going to build 3 of these small modular reactors, even though they are not built and operating anywhere in the U.S. The first one that was approved, they failed because of economics. Nobody asks any questions about these companies, these AI companies and their claims. I'm assuming Data Center Dynamics, when they reached out for further details, is asking questions like, where is this going to be? What type of small modular reactor is it going to be? And by the way, small modular reactors for 1,000 megawatts for a gigawatt data center, it's going to take a hell of a lot more than 3 SMRs to power that, which means it's going to be mostly fossil fuel powered with a couple of, most of the small modular reactors I've seen are like 20 or 30 megawatt models. I mean, the new scale one is nowhere near big enough to power a gigawatt data center. But nobody asks questions. They just repeat it. You go on Twitter and you look at Oracle and nuclear power. Like, let's just do a real quick search here. Oracle, nuclear, and look at all the claims here. Nuclear energy will become prevalent, according to Smug Fecundity. That's a nice name. Probably read it three times already. A megatrend staring at your face will disrupt a lot of industries. All right, nobody asking any questions like, this has never been done before. Nobody's even close to doing it. Does anybody want to like maybe make sure he's not full of it? Cat News is one of the world's largest software firms is building a data center with not 1, but 3 nuclear reactors. Here's Lightbridge Corp. They're referring to a CNBC article. Oracle is designing a data center that would be nuclear powered. Nobody's asking any questions. All of them just repeating the same claim. Here's Tech Radar. One of the world's largest software firms is building a data center with not 1, but 3 nuclear reactors. Over and over again, people just, the race goes on. Have been hearing about this mini nuclear power plants powering data centers. Oracle looks to be building soon. Claiming they've got permits. That is an easily verifiable claim. So it's not here. I can tell you that. It is not in the U.S. These construction permits that Larry Ellison says he got to build his 1,000 megawatt data center in wherever it is, it's not in the U.S., at least not according to the NRC. And you're not going to build a small modular reactor without the NRC giving you your blessing, that's for sure. So maybe that's why the stock sold off a little bit at the open today. And by sold off, I mean it just gave up the 9% that it was up already. But Oracle stock this week, big jump up this week on those earnings and that statement. But based on what? Nobody asks any questions. And it's important to ask questions, guys, because we've seen bubbles before where these massive claims were made. We've seen the crypto bubble where they made all these ridiculous claims, and it all ended up being BS. And look, the AI mania, it's run by the same people that built the dot-com bubble, the same people that built the crypto bubble. All right? It's all the same guys. And they're making similar outlandish claims. They have a history of doing this, and it was BS when they did it the last time. Thank you very much, Dragon Slayer, by the way, for the super chat. I appreciate that very much. He says, go get yourself a coffee, and hi, Mom. Yes, hi, Mom. Thank you very much, Dragon Slayer. I appreciate that. Appreciate the support of the channel. And once again, guys, I apologize for the technical issues today. Let's see. Let's go through one more because I want to talk a little bit about Boeing, because Boeing has only one way out of its predicament, and the stock market won't like it. This one was in Barron's today. First things first, Let me talk a little bit here. We have got this one in Market Watch. Moody's places all of Boeing's credit ratings on review for a downgrade. This one hit today just after this strike was announced. This could be a big deal. If Boeing gets downgraded, they're only one level above junk status right now. If Boeing gets downgraded, it's going to get real expensive for them to raise cash, and they may need to raise cash very soon. Let's read on here, shall we? Boeing stock is dropping as investors weigh news that union workers at the aerospace company voted overwhelmingly to go on strike. The big questions now are what's next for the company and the stock, as well as how it came to this. Plenty of issues are on the table, including the effects on free cash flow, Boeing's credit rating, and whether the company will have to issue stock. Now, give me 1 second to find my place, guys. I had everything highlighted, and then, of course, my computer blew up again, so... okay, where is it? Bear with me here. All right. They're talking about here the fourth CEO since 2019 at Boeing. For now, the clock is ticking and Boeing can't really afford a lengthy strike. Now, why can't Boeing afford a lengthy strike? It's because of their balance sheet. Boeing has major cash issues, and those cash issues are not getting better. All right, losses accelerated. Where is it? All right, losses accelerated after Moody's put the company's credit rating on review for a downgrade. Moody's rates Boeing long-term credit rating at Baa3, the lowest investment grade rating, which means a downgrade would downgrade them to junk status. And that would also mean that every pension fund in the country is not allowed to invest in Boeing's bonds. So it would lower the potential pool of buyers for Boeing's bonds, which means the price of those bonds would probably go down, which would mean Boeing would have to pay a higher interest rate to borrow. Boeing's credit rating from S&P Global is BBB-. That's the firm's lowest investment grade rating. An extended strike would delay the company's recovery and put pressure on the rating, said S&P Global in an emailed statement, adding that ramping up 737 MAX production higher is key to having the company generate free cash flow again. Workers that make the MAX are now on strike. So how's that ramping up going? Not going to ramp up much without people to build the planes. Jefferies analyst, someone I can't pronounce, estimated that Boeing would need to take a $1.3 billion hit to free cash flow for every month that the strike goes on. Before the strike, Wall Street projected a cash use of $3 billion for the third quarter, followed by a free cash flow of $3.4 billion in the fourth quarter. The final quarter of the year is typically strong for Boeing, but improving cash flow depends on delivering more planes. So Boeing is burning cash right now. They're going to burn through $3 billion this quarter. They've only got $10 billion left, which means at the end of this quarter, they're going to be down to about $7 billion. And they're saying here that they're going to burn $1.3 billion for every month that the strike goes on, and that they can't generate any positive free cash flow until they drastically increase their 737 MAX production, which is definitely not going to happen with the company on strike. So even after the strike ends, it's going to take them a while to ramp up their production. And that's on top of all the safety issues they've got going on and the FAA investigations and the criminal probes. So Boeing's got a lot of issues here. The stock getting clobbered. Well, it was getting clobbered today. Oh, that's because the opening bell has rung. It was down another 3.5% here, trading at $156. Now, guys, I would add the stock at $156. It's trading pretty much. Let's go back to a month. Where were we? Yeah, it's trading higher than it was before the proposal for that 25% raise was even passed. And by the way, guys, talking about all these other issues about raising funding and everything else, well, how are they going to generate that free cash flow if they're going to have to give their union employees a big pay raise? That 25% raise was rejected, which means the raise that they actually do get through, it's probably going to be even bigger. And so pay raises make it harder to generate free cash flow, makes it harder for you to get out of the issues that you're currently having with cash burn. And I just want to say thank you very much to Jose Orozco, who says, I hear Oracle's data center will be protected by a moat filled with sharks and laser beams. Will those freaking laser beams be on their freaking heads? I wonder, Jose Orozco. What movie? Tell me down in the comments. Jose, you can't give it away. Don't tell them, but I know what movie you're talking about. I learned this from a source that wishes not to be named. Well, I have my pinky up to the corner of my mouth right now, Jose. If my camera wasn't on the fritz, I think you'd probably hear that, or if StreamYard wasn't on the fritz. Whatever's going on in the world of tech, that's really interfering with my live streams. But regardless, thank you so much, Jose, for the super chat, the support of the channel. And thank you to Tom Dillon, who says, from your nuclear industry experience, do you believe molten salt reactors will ever be viable? Well, let me add, Tom, 100% of my nuclear experience is on water moderated, water cooled, light water reactors. So you got to take my opinion here with a grain of salt. These my reactors are totally different animals than a molten salt reactor. The one thing I can tell you is the molten salt reactors, there is a certain degree of inherent safety into them. I don't want to get too much into the high level physics of it. Do I think they can or will they ever be viable? Yes, I do think they will be viable. It's not viable at the moment, at least not. I think our regulatory structure plays a big role in why it's not viable. I think we need to drastically overhaul our nuclear regulatory structure in this country in order to make these reactors, which are incredibly safe, by the way. There's the safety record of nuclear, even when you factor in the big events, which get all the press, factor in Chernobyl, factor in TMI, factor in Davis-Besse, which most people never heard of, factor in Fukushima. Still, nuclear has a better track record of safety than anything, including wind and solar. The deaths per megawatt hour of electric generated are higher for wind and for solar than they are for nuclear. And you know what? Maybe that's going to change, Tom, because we're finally starting to see a little bit of PR from the nuclear industry. I've seen a couple of ads like on YouTube and things recently where like there's a lady at the checkout and she's whispering, nuclear is safe. It's okay to like nuclear. And, you know, for the entirety of my nuclear career, you know, I was a big advocate of nuclear. I used to write for a nuclear blog. I was pounding the table. Why doesn't the industry advertise? Wind and solar and natural gas advertise every day, but we never see the nuclear industry do it. Well, they're finally starting to do it. And I think it's got more to do with data centers in Silicon Valley than it does the nuclear industry, because the nuclear industry is notoriously tight-lipped. They don't like people talking to the press. So will molten salt reactors ever be viable? Yes, I think they will. They are not, however, at the moment viable because the only one NuScale's reactor just got canceled because of the economics. It just wasn't working out. And I think the regulatory structure has a lot to do with that. I think we need to overhaul that. But long term, I remain optimistic about nuclear, but there is a lot that needs to change in the way we split atoms in the U.S. if we want to make it viable. It's silly that we are spending billions of dollars to defend nuclear reactors against 30-foot tsunamis because, look, the tsunami leveled everything in and around the nuclear plant. There was nobody left alive after the wave for the nuclear plant to hurt. Everybody was dead. The wave swept them away. It's stupid. And, you know, the wave killed, 100,000 people? The nuclear plant killed 0.0 people. There has still not been a single death attributed to Fukushima after all the stupidity that we had to listen to in the press after that tsunami and the inherent hydrogen fire that resulted in the big poof of the reactor buildings and the meltdowns and the cleanup, which is still ongoing. There has still not been a single fatality because of that. But try to get that past an anti-nuclear activist. Good luck with that one. Thanks again, Tom. And thank you, Eugene, who says this is one badass channel. Thank you. Well, thank you very much, Eugene. And you're most welcome. I've been called a lot of things recently. A badass is not among them, but I'll take it. Thank you for your kind words, Eugene. I appreciate that very much. And guys, the market, and thank you for supporting the channel, by the way. Appreciate the generosity, guys. The market is now closed. Let's see where we finish the day. The S&P, oh my God, I got to deal with all these pop-ups because of the reboot. The S&P is not currently. It closed the day up 29 points at 5624, up 0.5%. The Dow ended up closing the day up 297, just shy of that 300-point mark, 41,393 for the Dow, within striking distance of an all-time high. And the NASDAQ ended up closing the day up 0.6%. It's 17,681. Let's check in with the commodities. Also, we had spot gold ended up finishing at 25.80. Great day for gold, up 22 bucks, 0.87%, and silver closing the day at $30.72 for spot silver, up 85 cents. I like the shiny. So, long story short, how do we wrap this one up? Basically, everything this lady says is BS. How's that? How's that count? Please, sir, may I have some more? Claudia Sahm, who was notoriously wrong about inflation while complaining about the gender of economic policymakers, and then was notoriously wrong when she was gaslighting people, saying it's the best economy ever. Americans are way better off financially than pre-pandemic, even though their rent has gone up, their food has gone up, their utilities have gone up, and their wages have not gone up. She says you're better off. And now she says, give us 50 basis points. Yeah, man, let's put her in charge and let's see how that goes. This is going to go really well. Claudia Sahm, the notorious world-famous economist and academic who blocks anybody who questions her stupid ideas. Now she wants more easy money. We're still suffering from the last batch of easy money of Zerpenberg, and she wants even more. Now, look, guys, I think the economy is in trouble here. I think we have a choice. We've got a dilemma. I've often said that. A dilemma is a choice between two lousy options. The problem is she is very strongly advocating for one of those lousy options while totally ignoring the other lousy option, which is a big problem. All right, we have a choice here. We have a choice between higher unemployment and higher inflation. One of these two things is going to happen. I think we're going to see higher unemployment, and then the Fed is going to overreact, as they've often done, as Claudia wanted them to do even worse last time, and then they're going to bring back the inflation. And yeah, we're stuck in the 70s. Like, where's this silly New York Times? Yeah, no, sorry, New York Times, I'm not paying. But yeah, we're stuck in the 70s. That's what she said in this op-ed, that the money men could save us, but they're stuck in the 70s. Because we remember in the 70s, there was 3 distinct waves of inflation. It came up, it came down, then it went up higher and it came down, and then it went up even higher and it came down. And Claudia Sahm is going to create that second wave of inflation with these stupid rate cuts that are going to be too big, too fast. And look, guys, inflation is still well above the Fed's 2% target. Yeah, it's a lot lower, but inflation only looks low if you weigh it against the inflation of 2022, which Claudia Sahm told us was never going to happen. Well, it did happen. And it's going to happen again if Claudia Sahm gets her way. And I just want to say thank you very much to Don Peterson. Thank you very much, Don, who says, thanks, Jack. Keep exposing the clowns. You got it, Don. I intend to. I'm not going to let tech issues stop me. By the way, guys, I want to say thank you very much, everybody, for keeping, for sticking with the channel here through the tech issues today. I know that was kind of a drag and the camera's not working. I'm going to work on these things over the weekend, see if we can't get those resolved. Thank you very much to my man, Jose Orozco, who says reassuring words from Yellen for the weekend. Dance, monkey, dance. Well, Secretary Yellen, do you have any reassuring words for Jose to finish the weekend? Yes, Jose, I would like to say that I just want to remind you that I did not receive a bag of the Buc-ee's corn nuggets when you went to San Antonio and gave Jack those corn nuggets. I'm told they were very delicious, and I did not get a single Buc-ee's corn nugget, and I will continue to buy back treasuries and spend money and overinflate and drag on the bond market until those delicious corn nuggets show up in my hand. But I would remind you that the economy is strong and resilient, and our banks are well capitalized. Thank you, Secretary Yellen. Jose, you heard the lady. You better get her some corn nuggets. I mean, she's small in stature, but let me tell you, she hits harder than she looks. I know from personal experience, this lady has a mean right hook. Watch out, buddy. All right, keep your guard up at all times, and get Secretary Yellen some freaking Buc-ee's corn nuggets. Thanks again, Jose Orozco, for all the help, everything you do for the channel, and for just being a swell guy. I appreciate that very much. All right, guys, that's about all the time we have for today. I want to say thank you so much, everybody, for sticking through the tech issues and for listening to me ramble. Thank you for Claudia Sahm for being a political hack and the worst economist ever, and for the transitory inflation. Please, sir, may I have some more? Thank you to all my Patreon supporters and magnanimous melon heads on YouTube and Patreon. You guys rock. I got links down below, should you feel so inclined. Happy birthday, mini-me. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.